Safe to say 2025 has been a very difficult year for a lot of us, and we are no different. We are also finding it a challenge, but it doesn't mean that we have no plan or strategy going forward. So we're going to share with you in this video exactly what we plan to do. So let's start with this chart here. Too busy to find stock ideas? Check out Fiverr Pro to shortcut your research time and effort by 90%. 10% off link in the comments and description, which is showing a lot of net foreign outflows out of Southeast Asia. Now, I know Malaysians, we like to, talk about all these net foreign outflows, but what people don't realize is that everyone is experiencing it, right? Of course, we like to think we are the only ones, but in fact, everyone except maybe you can say Philippines is quite stable.
Yep.
Everyone else, Vietnam, Thailand,
and even Indonesia right now. Like recently, there was a tumble because of a political kind of like issue.
Yeah, there you go.
But yeah, we have Vietnam and also the Thailand that is facing the worst than us. So that's why if you look at their index, they also like tumbled quite a lot. And if you look at the index that is only in a positive year to date, it's only 3 or at least
Vietnam,
4.
South Korea, and Hang Seng.
Yeah, and also Singapore if you want to add it there. So yes, it looks like they are still like making some sort of, or at least investors are making some sort of money because the index is green. But you also need to know that these 3 indexes or their countries, right, is going to be impacted because of the tariff. Because Trump haven't really like imposed much of an additional measures in terms of retaliation. So far, China got imposed some tariff, but then the US didn't really retaliate that much yet. It's still in the works, still in the progress. So that will definitely impact their economy. Another one is Vietnam also. I mean, you can see the foreign fund also is like dropping more than ours, right? So yeah, the foreigners already know about who is going to be the next list, which is going to be Vietnam. Korea so far, they are still fine. But eventually also there will be some sort of measures that will be impacting them.
Yeah.
So what we are trying to tell you is that the indexes that you see right now that is in a positive, maybe they will start to like drop. Not to the negative, but at least it will slow
There's
down.
a chance, yeah.
Yeah.
Because I believe all these 3 have a trade. I'm not sure about South Korea, but definitely China and Vietnam has a big trade deficit. In fact, Vietnam's trade deficit with the US is 4 times larger than ours.
Yes, exactly. And mostly it's coming from China, obviously. Yeah, we know that. Okay, then we also have this chart by the Bank of America Global. So this is basically their fund manager survey. And you can see that there's one interesting chart over here, which is the
outflow
fund
from
managers.
US.
Yeah, they are selling out their US position. But at the same time, their cash position didn't increase.
Yeah, they're relocating.
They're basically like shifting somewhere else. And this is where they're actually buying it. So you can see like gold prices going up, Euro stocks going up, Russia stocks going up, Hang Seng also going up. Bitcoin, I mean, is still dabbling around there. So this is actually where they are buying essentially these few stocks. Why Euro is because lately the government actually spent a lot of like, I would say, they put a lot of their money into this defense sector. So that's why a lot of those military stock-related stocks are up a lot, 100% also got in this year to date. Then you also have Russia. Russia is because there's some sort of like rumors saying that, the Ukraine and Russia war is going to be easing already. And also the sanction that the US imposed to them will start to like lift off. So those are kind of like very good signs for Russia and also for Euro. For Hang Seng, this is a given already. I mean, China, they gave out a lot of stimulus checks. They lowered down their interest rate to stimulate the economy. And also, but funny thing is that I was actually watching some of the on-the-ground research by CNA Insider. Basically, they are saying that the middle class is still not spending money.
Yeah, they can't actually, like they were doing some grocery shopping, and then they were comparing what they can
the prices,
afford.
Yeah. But at least for tier 1 and tier 2 cities. But for tier maybe 3, 4, those like lower one, they got increased a little bit of their spending. But obviously, you want to see whether they are tier 1 and tier 2 cities, whether they can spend because that is where they are getting their taxes from, right? So on the ground, it's still kind of like a challenge. Whereas for gold and Bitcoin, this one is more of a, kind of like a hedge if you decided to have no ideas for the stocks. Okay, all this because we also found out that VCs are pouring a lot of money into AI robots. And you can see that this is the news that we shared to our Fire Pro member groups. Is basically this company called Figure AI. they managed to raise about 70 million at a 400 million valuation in early 2023. Then 2024, the valuation bumped up to 2.6 billion. Then 2025, it went up to 40 billion valuation.
Yeah, crazy.
So yeah, it's a 100x increase in 2 years. So that probably could be also another place where fund managers are pouring their money in, which is AI robots. Okay, another interesting news is, of course, the ESG that it seems like it's ending, because right now the EU guys who are the pioneer of this ESG thingy, they are kind of like scaling back in terms of their spending on green energy initiatives. So those oil companies, you know what they say, they want to ramp up their oil production because they need to give back, shareholder value. The renewable energy sectors is not really giving them good ROI. I mean, most of them are actually making losses. So they're cutting back on those capex on RE related, and they're spending more on dirty energy. So yeah, we are going back to square one again. And also, this doesn't help with Trump leaving the Paris Agreement, which is also another reason. Basically, the ESG initiative is kind of like wanting or dwindling down already. So yeah, probably it could be a good sign for oil and gas. But of course, higher production means potentially Brent oil price will be like lower if assuming there is more supply, right? But another sector which is under the ESG constraint is also palm oil. So it also could be another catalyst whereby the palm oil's valuation might have some sort of re-rating, assuming that this ESG start to end quote unquote, or become lesser, right? Because I read one of the article in the Singapore, they say that the valuations for most of the plantation company in Malaysia is actually at a very attractive for value investors, and also the dividend yield is quite high. So that's why they say that maybe there is some sort of re-rating, or fund managers might start to pour in money there. Okay, so basically that is what is happening around the fund manager side of things. Now we're going to be sharing with you guys our strategy for 2025, and here are the 5 things that you need to avoid. So we're going to not tell you what to invest, right? We're just going to tell you what to avoid, because obviously you want to take care of the downside. Number 1, obviously, is debt. Not only just company debt, but also your own personal debt.
Yes. I think it's very important also, because I think with AI and robotics, right, there's a good chance that you would have to invest. So that's one, but also you're going to face competition a lot of these companies, right? And so if you are heavily indebted, a lot of incoming competition will pretty much wipe out whatever profits that you have. And of course that can be a huge contributor to your expenses.
Yes.
So especially with interest, the size of the debt itself is not necessarily the problem, but it's actually the interest that you have to pay.
Yep, and also during the times of recession, right? I mean, that's also a double cost for you to pay up when your business is not doing well. The second one, which is unnecessary expansion or diversification. I mean, this one is a given. If let's say the boss or the company decided to diversify into their non-core business, for example, they want to do robot. They want to build robot, right? Let's say this company sells garments or something like that, or shoes. Then they want to build AI.
They can use robots for their garments. That's okay. But to sell the robot, that's going to be tough.
Correct. So hopefully, if let's say you came across any company that do this kind of unnecessary expansion, probably you want to avoid them. Third one is little to no dividend. During recession, right, obviously you want to have cash, you want to have cash flow, right? That is the most important thing. So if let's say if you see companies that they start to cut their dividend payout, that is usually a bad sign. I mean, obviously because you want very steady, very stable kind of payout ratio, right? Or payout from the companies. So this is also another thing to avoid during times like this. You want to make sure that the companies that you invest in, they have the capability or ability to give out dividends. The fourth one, sales and cash flow. I got inspired by the Sapura's recent scandal, right? Not really scandal, but
well,
they're trying
the
to
1.5 billion bailout.
Yeah, correct. Yeah. So they are trying to restructure everything. And one of the reasons why Sapura failed so badly in the past is because the management, they focus more on sales growth more than cash flow. So they basically, because I think back then also there was a bull run in the oil prices also in 2010 to 2014.
Yes.
So, so that's why they number one, they overexpanded. They did a lot of M&A. Then their only target or objective is just to increase their sales growth. They didn't really care much about cash flow. Now only they start to think, you know what, we need to focus more on cash flow. So this one is also to avoid. If let's say the management wants to focus more on growth more than cash flow, then you need to be careful. Which leads us to the final one, growth more than ROIC. I mean, if that you can grow your company, just like your buy now pay later or your those digital banks, right? I mean, it's good to grow big, but if it's not really giving back you capital,
just to explain your point more, like initially you spend one to produce, let's say 15 cents. It's okay, not too bad. But you want to grow 200, 300, 400%. But sometimes, in fact, very often, when you double, triple, or quadruple your sales, you spend $1 for, let's say, $4 now. By right, you should be getting, to get the same 15, you should be getting 60 cents back, right? But now you're only getting 50 cents back. Doesn't sound like a big drop, but you're basically being less efficient.
Yeah.
And as investors, you want to have a good and sustainable ROI. There's some scenarios where you can accept a lower ROI, but it needs to be a very, very good reason. Like, for example, if you really maxed out in your industry already, and you want to maybe secure certain supply chains, that maybe you can consider. But in most cases, growth actually leads to more destruction because people do not have a functioning ROI machine. And when it's not functioning yet, they will just want to grow. They will actually lose more money over time, or they'll be less efficient, either one or both.
Yeah, so Buffett also like emphasis on low cost of capital, and then you want to focus more on the one that can give out more returns on invested capital. Okay, now the biggest question obviously you want to ask is going cash is also a strategy for 2025 because it's such a mess, right? This is Tong's portfolio. Recently, he sold a lot of his stocks, 3 stocks actually, KSL, Gamuda, and so IOI Properties. Interestingly, these 3 are linked to property and construction. The only construction company he kept was Kumpulan Kitakon. So yeah, this is pretty, and also ULA development.
Yeah.
But anyway, just to highlight, because right now he's holding about 54.5%. Previously, I think he was holding about 16%. So the cash pile actually increased a lot. So is this a sign that we should be defensive and to go cash? Well, we did this flow chart for you before you even thinking of how many percent to keep as cash, right? So you need to go through like this. So green is basically yes, red is no.
Yeah.
So number one, if you are not working full time, you are retired already. The best case is obviously
or you're unemployed.
or you're unemployed. The best case is obviously you want to save as much as possible for you to at least sustain your living expenses for 2 to 4 years. This is the best case. But if you are married, you're working full time and you're married, and let's say you're married, obviously you got more commitment, right? So it's best for you to save 1 to 2 years worth of expenses. But then here comes whether you have family commitment. If you're not married, and let's say, but you have family commitment, then maybe you want to keep 6 to 12 months. But if you are not married and you don't have family commitment, then you can go more risky move lah. You can just keep 3 to 6 months and invest more in the stock market. But this one is more towards your own personal. It's not related to your investment. It's more related to your own personal expenses.
So the key message here is don't get married.
Yeah.
But yeah, I think it's a good flow chart for people to understand. And the key message here is you need to know yourself, right? I think there's actually a lot of other questions here, right? Do you have a sickness?
Yeah.
Do you have expensive hobbies? Do you like to eat a lot? Do you like to travel? There's a lot of other things. But again, this is here to tell you, hey, know yourself, plan accordingly.
Yeah. So then the next one is basically what cash should you have inside your portfolio. So this one is for your own investment, right? It's not related to your personal. So simple rule you can do is actually just look at poly markets, and then you see what is the percentage or the likelihood of a recession that is going to be coming in 2025. So if let's say they think it's 35%, right? The easiest is obviously just to keep 35% cash. That's
in that sense.
Yeah, correct. So if you think that you personally think that a 50% chance that recession will come, right? Then you can keep 50%. So this one is just a simple guide only. I mean, it's not a hard and fast rule, obviously. If you think that the company that you invested is good, you definitely, and it's going down already, obviously you can average down and reduce your cash holdings. But this one is just a simple rule if you want to follow, or you don't know how many cash you want to have inside your portfolio. So yeah, just to share also a little bit, we have this news update inside Fire Pro. I think we have this already
Yep.
for a long time ago. Just that we didn't really like share a lot.
Yeah.
But yeah, this is for a chance for you to actually get a lot of updates on you know, our
without having to
strategies.
read the Edge, without having to read a lot of Twitter
The
posts
news.
or whatever.
Yep.
And more importantly, also the analysis.
Yes.
You know, it's not just about getting the data in, right? It's how do you actually understand this in context to Malaysia, in context to your own portfolio, wherever you are.
Yeah, and also just now we talked about Tong's 50% cash right now, right? We got it from the Edge, and he also talked a lot about Trump's policy and how to navigate for 2025, and everything we share inside this news update. Then we also give our own thoughts and opinions on what we have learned from reading it. We share some interesting charts over there as well. So if you want to get all of these latest updates, all these insights, it is all inside Fire Pro. Okay, so this one, it is the performance for February 2025. So far, I mean, February is the
March will be
it'll
down.
be lower. Yeah, it'll be lower. Except for FBG, I think this one is still okay. I mean, it's not 5.55, but it's still like much more steadier. But if you want to get a taste, you want to see what stocks that we've covered so far. I think recently also we bought some positions, and also we tweaked a little bit about our strategy for Fire Pro Malaysia. So yeah, if you want to know more about Fire Pro management that we have met also, I think the next few we're going to be meeting, it is Kuku.
Yep.
Yeah, and also there's also a bunch of new IPO companies that doing briefing, and we also share inside there. So if you want to get more information, it's all inside Fire Pro. And if you want to see how we do our write-ups, what are the videos are inside SIB, and also the management notes that we have written inside Fire Pro, it's all inside this Fire Free sample. So if you want to get a taste, you can just download it, you can just like watch it inside. The links will be in the description and comments below. So that's about it for today's video. See you guys next week.
Bye bye.